Hello, friends. Welcome to the Momentum podcast by Weekend Investing, the show where we will dive into the world of smart investing and personal finance. Each week, we will invite a guest, and through their lens, we will go through their investing journey, their triumphs and failures, their learnings, and try to implement those in our own investing journey with actionable points. So, let's see what today's guest has to offer.
So, welcome to Weekend Investing Chat, Rachit. It's great to have you here. This is a chat series that we have started to interact with weekend investors, learn about their journeys, about the lessons that they have learned, about mistakes that they have made, about their experience with momentum investing, and even otherwise, across asset classes, what has been the sort of path that your invest, because everybody has had a different path in their investing life cycle, and it's great to hear from others, how what has been their path. So let's start with a brief about your background, education, profession, where do you live, what do you do, and then we'll move into your starting of your investing journey.
Certainly, Alokji. So, first of all, it's an honor to meet you. I have been following you on Twitter and whatnot, learned a lot from you. So, it's really an honor to see you on the screen at least, and but one-to-one basis. So, I'm Rachit. So educational background. I did my BCom past, and medieval times, and then I am an MBA from ISB Hyderabad.
Oh, great.
I work with being an account, in finance. So I worked in a lot of finance company, a lot of corporates, a lot of multinationals in finance. Then moved to consulting organization, management consulting organization. Was born and brought up Delhi, but then last 2 years, 3 years, moved to Bangalore. I work in a pharma organization into the enterprise transformation space. So that's my background about it.
Okay, okay. And when did you pass out from your ISB, and when did you start working after that?
So no, I started working after my graduation, which is
Okay,
year 2003, when I did my BCom from Delhi University.
okay. So, what is your recollection? uh, From what point did you first make your first investment? In what instrument? What inspired that investment? Just a bit about your starting phase of your investing journey.
Sure. It may be a little long answer, but I'll try to crisp
Yeah,
as
yeah.
much
Please
as
go ahead.
possible. I belong to a family of bankers. So my grandfather was in RBI and my father was in bank. So I've always seen
Wow.
this investment money and everything at my house. I still remember filling up an IPO form of BSNL for my dad. So I've seen those times because he was bank and was an equity investor. But then with that, we have also seen very downfall as well. I've seen what is happening after, Harshan Mehta scam to Satyam. So I've seen those sides as well. And I think that's where the family and the overall, we started moving away from equity and more into real estate. So, just flowing with whatever is happening. So we
Yeah.
started flowing, but very unorganized sector, right? And the way those times were, right? Whether it's real estate, whether it's broking, or equity investing, it was not that easy, right? So that's something which is like how I know about all of this. I when I graduated, I started my career, my first year career with a stockbroker as well. Got NCFM certified and all those things. And I said this may be my career. But then 1 year I realized no, I don't have to. So I moved to corporate. Now that's where the whole journey started. When I touched the corporate career, I started earning well. So it's my own money, my own decisions to be taken. One thing which was very clear that with a full-time job in a multinational and whatever corporate life is, you can't do very active investment, and also you don't make money out of it. So I started investing in mutual funds at that time, doing SIPs and investing in mutual fund. And this back 2004, I'm saying I started
Great,
investing in
great
mutual
timing
funds
actually.
and also real estate, of course, because the way things have happened, right? There has been growth in real estate, but not in equity. Somehow the journey has been very turbulent. So investing in real estate, the builder is not giving on time, and there are issues with that. Investing in stockbroking, stocks directly, you never know what is best to buy. And mutual funds, of course, I invested. But then also I felt a lot of problems there. Invested through a very good friend who made me invest in regular funds, not direct funds. But on
Okay.
top of that, also charged me, and I was not aware, busy in my career life, charged me a lot of hefty, profit sharing, although making me invest in regular funds, and also
Oh,
did that. So
great,
that
great.
happened, right? Yeah. So
One very good principle that somebody taught me is never do business with friends and family.
absolutely.
Because you run the chance of ruining your friendship because when greed comes over, and
Absolutely.
person will forget all relations.
So
So
that's what
so
happened. So lost
yeah,
my friendship as well as in,
yeah,
but then
yeah,
and then I'll go to the COVID times then. So when COVID
yeah.
happened, right, the mutual fund was sinking, and I'm like, what's happening? I'm well educated. I know finance. I've already seen what is happening. So like I said, oh, let's take a step back. Of course, more time in hand during COVID times. So I said, why don't I just take a step back and take my things in my hand? Thanks to social media, you are able to connect with a lot of things, realize this, all the TV pundits, what it means and everything. So of course, Twitter really helped me to connect with you. So two things, right, which was a turning point. One, I got this Psychology of Money from Morgan Housel.
Oh
I think
yes,
that is
great book,
really
great book.
great book. So that book actually helped me to know what needs to be done, how much money
Wow.
is enough, how much wealth you need. But then how was absent. So how is where I when I got in touch with looking at you and weekend investing, I said, okay, this is the right way of how I really resonated with momentum investing. I resonated with passive investment, and passive is the way to go. I tried a lot in between to do active investment; it doesn't work. So that's where I started doing things with weekend investing. Resonated with it. Did few mistakes there as well, which I'll share later. But then that has been the journey, and it has been a phenomenal journey. I think I think if I now, with all your guidance, I do an Excel, do my portfolio rebalance. I don't choose the equity. That's something which I let you do. You do the best. Do that rebalance and all those things. So I think it has been a great journey. So to quote, I think of course I do invest more out of my own earnings and everything. I think for last 5 years, there's an IRR of 33% is what I'm getting.
That's amazing. So prior to doing momentum investing style of investing, you obviously were looking at more fundamental or value oriented mutual funds also. And did you also do direct investing of your own? I mean, studying companies and being in some industry, trying to figure out what's happening in that industry and sort of investing based on that, or your colleagues helping out on research. Did that phase come to you of that, as well as perhaps even doing some shorter trades, intraday derivatives, something like that? So did that, because that usually is the learning curve of most people. They'll go through all that, then they'll say, no, this is not good. Let's move to more stable
Yeah, yeah. So
investing.
absolutely did all of that. So I
Okay.
think especially COVID times, more time in hand. So tried derivatives, FNO, didn't work, losses, almost here and there. But cutting my losses is what I also learned from you. Cut your losses, move on, which is very difficult. But I did that.
Yeah.
Had some IPO investment, or I was in love with few organizations which will work.
Oh,
So
oh,
to
okay.
for example, Vodafone, I've done that. Yeah, I have done. I think the only one which I think I did well was investing into a pharma portfolio of mutual
Okay.
funds in the COVID time that actually held. And that
Yeah.
was probably was creating a bias in my mind. Okay,
Right.
this one
Right.
now maybe I'll get to, but it never happens, right? It's all by fluke.
Right.
I tried to being an MBA and being from finance. I tried doing fundamentals. I tried different algos. I also use this tool. I'm forgetting the name where you can create an algo or the filtration. So I try to replicate uh,
Sure.
your small case of all-time high. Never worked. I said I'll replicate what he's doing. I can also do it. Failed miserably. Never works that way, right? So yeah, I have done everything and anything. Learned hard way.
Do you think that most people, especially those who have been to, finance schools, MBAs, uh, are more confident that investing is easy, and one can do it themselves, despite being in high stress, high time consuming professional jobs. um, and I mean, like most other things, on a professional basis, whether it's an engineering job or a doctor's prescription, we always go to a specialist. But somehow when it comes to investing, a lot of folks feel that that's not required, and we can do it ourselves. So your thoughts on that?
No, absolutely. I think there are two type of personas, as to say. I see one who are absolutely into passive, who believes in FDs still today. Okay, they need that's their peace of mind. So let it
Yeah,
be.
yeah,
That's what they like doing, either that or a little bit of real estate, very conventional investing. Second one is, who has got the right balance, but they still go for mutual funds and things like that. And third one is, of course, who want to their investing, who really feels very successful during the bull run, but then when it is coming to down, they are not able to do it. So there are all kind of people. I think where I feel in general, the problem is to pay someone and buy the services. So whether
mm,
it's software, right, or whether it's a services, paying
yeah,
someone and getting an expertise is something which is not very easy for people. And somebody who actually go ahead with it, then they look at taxes or short-term capital gain, long-term. I think that in the end, the funda is, as you always say, is how you can create your wealth better,
yeah, yeah,
right? But it's a mindset, and I don't know whether it's a particular profession or anyone. It's a mindset which we need to develop and create, where it's okay to buy the services from the expert. As you're saying, you go to doctor and take the prescription, but in India we do have self-medication, a bigger problem.
yes,
So go do the
yes,
investing. It's similar to go and get to an expert and buy. Is difficult in a sector like India, right? And social media and everything, there's overflow. There is so much
mm,
happening. Where to
mm,
go and where to find a credible person where I can invest and I can understand all of it is also difficult. Now, somebody who's coming from this background, it's easy for them to differentiate at times. But
mm,
people who are not from finance background or they don't have a knack for investing, it's very difficult for them to make a judgmental call and a calculated decision where to go. So that's where I see a lot of confusion, Anubi. I think the sector needs to get more organized. The sector needs to find ways, how they can go to the right person or the right individual or the right firm to get the advice.
because from what I've read is that, in more, let's say, developed countries, there is more thought process of having a financial advisor or a consultant for your wealth management, or to give you guidance, than, let's say, here, where, also because a lot of folks in this industry have taken people on a ride. So there is wariness of going to a new person, that maybe he's a person who's going to take me on a ride, and that probably also is that. So anyhow,
Yeah.
coming back to your journey, you've also dabbled in real estate, in terms of allocation. Have you ever allocated to gold as well? What is your thoughts on this asset allocation part, if you may
Yeah.
share?
So my thoughts are same as yours because I learned that from you. So till COVID times and before I started following weekend investing, zero gold. Gold meant
Okay.
nothing. Probably the last time I got gold when I got married, and that's it. So never believed in gold, but I think now I have a very great balance of portfolio in gold. I primarily invest in SGBs. So
Very
I
good.
have a lot of
Very
old SGBs and all, because I found that the safest way and also get some interest out of it. So that's the best way, tax-free way to get it. And I do invest in SGB a lot. And for example, now in turbulent times, when the portfolio is going down, it actually works as an insurance, no doubt
Abs-
about it. In your
Absolutely.
bad times, right? You always say what happens in the bad time. The right portfolio balance actually shows you what is happening in the bad time. People must be
Exactly.
30% down, 25% down, 30% down in equity. I am in single digit, 4-5%. Thanks to gold,
Absolutely.
right? Gold is absolutely saving a lot of that my mind space and my belief into it. So absolutely now I do, but all through SGBs. That's my best friend.
I mean, single digit drawdown in this kind of environment is just simply amazing. Hats off to you. So, this allocation of gold also is very important. Like, most financial advisors who I've seen are allocating 3%, 5%, even 10%. It is not going to cut the ice with those kind of allocation. You will need meteor allocation,
Hmm.
because if you want to hedge your portfolio, if you want to have that counterbalance, more significant amounts of weightage will be needed, not
So,
just in
so on
gold
that,
but in real estate as well.
yeah. So on that, Alokji, I think I learned from you, and of course through different sources. Simple formula: create an Excel file. I do that. So my 100 minus my age is the percentage in equity, right? Rest 50% gold, 50% debt,
Very
and
good.
that's how it is. Debt also includes real estate. I don't know if it's right or wrong, but that's my real estate, taking leverage, and I do that very actively.
Okay.
At least once a month, I go back to my Excel and I do that, and that's the savior. And I think this is the best simple way of investing, which I learned from you and of course different sources. And it's easy. It's easy to do that.
So I think this is very heartwarming to hear that you have a very structured approach to not just your equity part, but your entire portfolio in terms of asset allocation, in terms of looking at monthly or quarterly or 6 monthly rebalance of that asset allocation, where the money should be going now. I think that is very, very important, and extremely good to hear that that many investors are making Excel sheets at their end and trying to work towards this approach. Very good. So now let's come to, let's say, the biggest mistakes that you may have made. Everybody goes through a very steep learning curve in this market. Everybody pays the, as they say, the the tuition fees for graduating from equity market. So what has been your biggest mistakes, learnings from that, whatever you would like to share, and that may give motivation to a lot of new investors who will see this video.
Sure, sure, absolutely, and happy to do that. Learned hard way as well. One, as I said, never invest in FNO. It's not made for retail investors. It's not made for beginners. It's not made. It's not worth losing your jobs and losing your day jobs and investing in FNO. I have seen few individuals leaving their jobs because they thought they are making short-term FNO gains or not focusing on their career and investing in FNO because they got something short term, it will not happen. It never happens. So my suggestion is to stay away. It's very lucrative because it's like it's no less than, for the lack of better word, a casino. So stay
Yeah.
away. Second is avoid catching a falling knife. Somebody get a crash and you think it's an opportunity to jump in. It never works.
Hmm.
If it's going down, it will go down, and that's where the momentum investing helps. Just ride the bus which is going in the full speed rather than trying to catch a falling knife. It doesn't work. Don't try to time the market. Don't try to become guru that you would know when is the top and when is the bottom. Even market doesn't know that when it's
Hmm.
going to top and when it go to the bottom. So never try to do that. Even if by chance you get to do that once or twice, doesn't mean that you will get it. It's by chance, right place, right time. It will not happen. Nobody can do that. I think that's very common known. And find a trusted advisor. I think it's a fees you have to pay. So for example, for me, I went to an advisor, friend, mutual fund, did not work, but I didn't stop doing that. I still
Hmm.
said I need to find somebody who can make it happen, and
Hmm.
then look at short-term gain. So some of my friends, yeah, and if they will listen to it, they would know I'm talking about them. I made them invest in weekend investing, and they will call me after 1 month, oh, it's down. So are you
Hmm.
investing for a month or investing for years? Invest for long term. Look at the
Hmm.
long investment game. Even if you're doing small case, go to small case. Don't sort by 1 month, 6 months. Sort by 3 years. Okay.
Hmm.
And who is, even if the past history is an indicator, see where
Hmm.
it is, right? When I do that, I just look at fee base. I don't look at free base small cases. I look at fee
Hmm.
base, look at fee base,
Hmm.
create your small, start with something small and make it big.
Yeah,
But you
start
need
somewhere. Yeah, start somewhere, and at least
yeah.
that's true. So did you also go through this intraday and FNO phase of your life where you tried to have some short term gains?
Yeah. So I've tried FNO at some point of time, lost
Okay.
good money, because lost at that time whatever percentage of my portfolio. It was a substantial amount of portfolio, and I made a loss. And but I learned out of it what to do and what not to do. Somewhere it started showing up in my career as well at that time, because I was not able. 9 a.m. to 3:30 p.m. Everything is in your mind, is the market. You can't do your job. You can't do your work. Even
Exactly.
after that, your mind space is all gone in that. So never do that. Similar to that, for example, I tried crypto once, twice, and crypto is
Okay.
even worse because the market is open 24 by 7. Right?
Exactly.
You can do whatever you want to do entire night. Good momentum there, but it doesn't work. It's not worth it. We are not
Yeah.
here to
Yeah.
become a in the end, it's about the wealth, right? We are here to create a wealth. We want to create a wealth so that we have a good life post
Yeah.
whatever, post retirement or post whatever. That's the point. That's the point. We are
Mm.
here. We are not here to become an expert in all of it and find a shortcut to making money. Shortcut never works.
That's true. That's so very true. So, in terms of real estate, there's a lot of mixed discussion always on social media that the current generation does not believe in buying real estate. It seems, whereas older generation says that at least one real estate where you're living in is a must. So, what are your thoughts on this particular subject?
Yeah, so that's where my thoughts may be a little different to what we believe conventionally is that you need one place. So it all depends on the profession, right? So profession like me or the person I am, I just don't want to stay at a one place. So I'm born and brought up Delhi, but I moved to Bangalore. I want to move around, right? So I don't want to fall the way we should not fall in love with a company. I don't want to fall in love with anything. That's my ideology. So I think what I have done because of investing in real estate and dealing with type C vendors, builders, and all those things, right? Burn my hands a lot, right? And there was a downfall, right? A lot of real estate was really a dull investment for a longer time. So there was a time when I just came out of real estate fully. And I think that
Okay.
was the right thing to do because the investment was not very thought through where to
Hmm.
invest and what need to do. So I took that out. But then I'm now entered again after coming to
Hmm.
Bangalore. I took the leverage and again learn from
Okay.
you. Why not use my nice credit score and take some leverage, right,
Right.
off it, and then diversify as well. And I started investing. Yes, when I'm investing, I'm also thinking that today maybe I have a bigger family, I have kids and mom, and like everything, but that's not how the case should be. So I want to invest for something, one investment, and second, something where I may want to stay eventually when I stop working, right? When I don't need
Hmm.
mobility of working, when I don't need to
Hmm.
move, the cities or countries or whatever. There should
Right.
be one house, I still believe, where I can go and make it my space, but that doesn't need to be a 6 BHK or a big house. That
Right.
could be a 2 BHK small place and an
Correct.
easy living, right? Where you at least have
Yeah.
place to store your things. That's
Yeah.
what something started coming back. Hard way, what I learned, a reputed builder is very important. Don't go for one is not reputed who will give you a cheaper rate, but that doesn't work. It's difficult to liquidate that thing. It's difficult to deal with those kind of organizations. So very top rated builders, go for that. Don't want to go for, I've done that, I've gone for unorganized, these agriculture lands and all
Mhm.
those things. Not doing that. Long
Small caps versus large caps, perhaps.
absolutely.
So we have to take some risk.
Penny
With
stocks versus large cap. So
yes,
you buy a
yes,
penny stock and you are done because it's cheaper and valuation might look down. Go for a
right,
large cap, go for something. It's your money. Protecting wealth
right.
is important, right? And that's something which I also
Yes,
learned from you. One thing when the risk aversion comes, right? When you think about how will I mitigate risk, the hypothesis or the mindset I have is how can I protect my wealth? What will happen to my wealth? So what are the
mm,
chances of so for example buying SGP, right, versus other gold, the chances are low because it's RBI backed. Same is with a
yes,
builder, right? If a builder is reputed organization, one of the top real estate organization in India, there'll be an ecosystem which will support even if it's something false, right? So do the
yeah.
banks, right? You can go to a bank which is
Good
a
point.
small bank and you can do a lot of FD because higher rate of interest, you always pay for it. So better go
Yeah,
for it. something happens, it will be such a big deal that somebody will come, government will come, somebody will come to back you up. So that's how I
Correct.
mitigate my risk, when I do everything as a risk. But then, of course, I do have started diversifying. I think I was absolutely out of gold at one point of time. I got there 5 years back. I was absolutely out of real estate. It was hard for me to learn, look at your tweets and everything. I'm like he's nudging. I need to do something. But I did last year, and I started getting back to
That's
the
amazing.
investment.
That's amazing. And I think gold in last 5 years has been a fantastic journey as well. Of course, equities in last 5 years have also done well despite this fall that we are seeing now. The road for what is your sort of thought process now? I'll come towards the end of this talk now. What is your thoughts on financial independence? Like there's a lot of professionals talk about financial independence, early retirement. What are your thoughts on that? I mean, where is your sort of target date, or the number in your mind in terms of, are you about to reach there? Is it far away? What are your thoughts on that?
Sure. So one financial independence to me is when it's not about retirement. I don't think I want to retire ever. But
Correct.
financial independence is I can do what I want to do. Then I'll choose what I want to do. Right.
Hmm.
Um, there are easy ways to know what that number. The problem with that number, Alok, it always moves.
Hmm.
So as you earn more, as you have more wealth, the number moves to the right hand side as much as you want. So number is moving to the right hand side, but I think I'm pretty well placed. I'm at a more than a midpoint on where I want to
Great.
go from my investment point of view, from my wealth point of view, and at some point of time, of course, I will also call it and say, okay, I'm independent. Those are my thoughts.
Yes, yes, yes. Fantastic. So, Rachit, I mean, we'll come to an end to this very nice chat. It was a pleasure to have you on the show. I think I am very happy to meet you and find out that there are such brilliant weekend investors out there who are pursuing structure in their investing journey, who are extremely satisfied. From your face, I can see you are a very, very satisfied, happy, a person who's not worried about investing right now. And you've done it. I mean, single digit fall in your overall portfolio in the current scenario is a testimony to your structuring of your portfolio, the way you've done it. So hats off to you, kudos to you. I think a lot of investors will take a very good lesson from your journey. The way you have been able to maneuver through that, and that is basically the essence of this conversation. That you know we should not get despondent. We should not get overly stressed about investing. Investing can be done in ways where it can be a pleasurable journey while we are also enjoying the profession that we are in, and live our lives in a very fruitful and nice manner without really getting any negative sort of energy out of that. So that, I think, is very, very sort of evident in your case. So once again, congratulations, and I hope and wish that you have a very prosperous further journey, and we'll again touch base at some other time uh, for another chat. Thank you so much, Rachit.
Thank you for tuning in to another episode of the Momentum Podcast. I hope you found today's discussion to be insightful and inspiring. If you enjoyed this episode, please do hit the subscribe button and share this video with your friends and family. If you are a veteran weekend investor and you would like to be on this show, please fill the form below and our team will connect with you. As always, let's keep learning from one another and we will see you in the next episode. Till then, take care. Bye bye.